David, I want to pick up on the demographics and the challenges that presents for asset management. The stats that I've seen, for example, that in 2011, about 15% of the UK's population were over 65, more like 20% today. If we look at the world, over 60-year-olds, 2023, there'll be 1 billion over 60-year-olds. 2030, it'll be 1.5 billion. 2040, it'll be 2 billion people. The needs of the retirement population clearly very different as they go from the accumulation of their savings to drawing down and decumulation. How do you think the industry is responding to that shift in the needs of the population around the world? Predominantly also given the growth of defined contribution, the closure of defined benefit, the predominance of defined contribution in China, Europe, US, and the UK in particular.
I think it's a massive challenge, and it is those two elements: the aging population coupled with the change in structure between defined benefit and defined contribution. So, if we look at the UK, I think there's about twice as many people are members of DC schemes and DB schemes, but the assets of those schemes represent about 20% of DC schemes represent about 20% of DB schemes. So, the industry needs to understand and work through how to shift its focus from building solutions that meet the DB challenge, that collective, essentially collective insurance challenge, into one that meets the individual. And we need support from the regulator to help to ensure that the products and the solutions that are developed in the DC marketplace can operate and can give confidence to the consumer that they're actually going to generate their income over their life and meet their retirement needs. So,
I will echo that comment on the regulator. Clearly, the financial advisory market in the UK really doesn't address anybody with less than, say, £100,000 of accumulated assets. And I think there needs to be some form of safety net for advisors to do some form of nudge advice for people below that, so that the whole population, 25% of the UK population, do not have access to advisors. Going into retirement, you will leave the industry wide open to all forms of scams. And I think I agree that the regulation does need to move and pivot towards addressing that big issue.
Yeah, consumer protection is going to be paramount, but coupled with that is it's facilitating the innovation that's required. So whether that's collectivism in the DC marketplace or allowing individual investors to express their preference in their assets as well. So how can we integrate their preferences around environmental, social factors, for example?
Yeah, very good. Thank you.